Hello everyone, I am Adarsh, lecturer in Vidhyaashram PU College, the Temple of Excellence. My subject, Accountancy. In Accountancy, I have taken topic called Accounting Ratios. In the previous three sessions, we discussed about what is ratios, advantages, limitations, types, and also we have done problems also. Now, how many types in ratios? There are four types. What is the first one? Liquidity. Second one, what is the second one? Solvency. Third one, profit ratio. And the last one, efficiency ratio. Liquidity, solvency, profitability, and efficiency ratio. We have already completed the first type of ratio called liquidity ratio. In the today's session, we will discuss about solvency ratio. As I told you, what is liquidity ratio? Liquidity always go with short term and solvency ratio always goes with long term. Now, under solvency ratio, as I told you, solvency for what? Long term. Anything above or beyond 12 months, we call it as solvency ratio. Under solvency, again we have subdivisions, debt equity, debt to capital employed ratio, proprietary ratio, total asset to debt ratio, and the last part, interest coverage ratio. These are important ratios, comes under solvency ratio. These are compulsory 12 marks problem. In the whatever we did in the last previous sessions, those are 6 marks. Now whatever we are doing now, that is for 12 marks. For 12 marks, you will be asked 4 questions or 4 ratios. You have to work out on any 4. Now, in the today's session, we will discuss about debt equity, debt to capital employed, and the last part, proprietary. These three we will discuss today. Always remember, we should not learn what to do. We have to learn why, not what. Always go with why. Means don't learn only the formulas. Learn as well as concept also. Concepts are very important. Why we should do all this? That you have to learn. Now, the first one, debt equity ratio. So, you know what is debt? Debt means what? Loan. Debt means loan. Now, shareholders equity. What is shareholders? Now, before shareholders, I'll explain you what is debt. Debt means we call it as loan. Normally, we consider only long-term loans. Long-term loans. Which are long-term loans? They will mention you clearly debentures. Debentures we call it as long-term loans. In every balance sheet you will find debenture. Debenture we should consider as long-term loans or long-term debts. Now, what about shareholders equity? Shareholders means what? Who are shareholders? Shareholders are called as owners of the company. Now, which are the things comes under shareholders equity? Now, any share capital, any share capital. Second one, profit. Also, we can call it as surplus. And the last one is reserve. These three we call it as shareholders equity. Remember, your all problems are based on this only. If they ask for long-term debt, then you have to go for long-term loans or else debentures. If they ask for shareholders equity, three things you have to remember. One is capital, share capital, and the second one is what? Surplus or profit, and the third one is reserve. These three we call it as shareholders fund. These three belongs to the owners. Based on this we'll do problem. Now second one, before go to second one, remember your debt should be less than your shareholders fund. If your shareholders fund is 1, debt should be less than 1. It may be 0.75, 0.50, whatever it may be, it should be lesser than your shareholders fund. If it is more than shareholders fund, means your company is not in good position. Clear? Yeah. Means that means you have taken from outsiders. Shareholders equity means it is within us, within owners. So it should be more than always debenture. The proper thing is 1. This may be 1 equal, or else it should be less than 1. Second one, proprietary ratio. Proprietary, the name itself says that proprietary means owners. Owners of the company, we call it as proprietors. Now, what is the formula for that? Shareholders fund. Shareholders fund, already I explained you. Which are the things will come under shareholders fund? First one, your capital. Second one, your reserve, and third one, your profit and surplus. These three we call it as shareholders fund. Now, the second part, divided by capital employed. For capital employed, we have two calculation. Calculation number 1. If you are familiar with these working notes, the problems are very easy. In the question paper, they will ask you directly, just you have to do copy, paste work. Now, what is capital employed? Formula number 1. You have to take total assets minus current liability. You will get your answer. Formula number 1 is what? Total asset minus current liability. Option number 2 or calculation number 2. Equity fund. What is equity fund? Your shareholders fund, also call it as equity fund. You can also call it as shareholders fund. Plus addition, long-term debts. What is long-term debts? Your debentures are called as long-term debt. If you add these two, you will get capital employed. You can go for this one also. You can go for that one also. Both are similar. You will get the same answer. As per the requirement, as per the information available in the question, you can go for this calculation. Remember, shareholders fund, these three, and your capital employed are this one or this one. You can go for any one. Now, we'll go for the third one. Debt capital employed ratio. There is a third formula, a third ratio. What is the formula? Long-term debt. You know what is long-term debt. What is long-term debt? All your debentures, we call it as long-term debt. Now, capital employed. What is capital employed? Just now we learned you have two calculation. Calculation 1 and calculation 2. The same thing will apply. If you calculate once, the same answer we can use it for all the formulas. Clear? Now, in the today's session, we are learning 3 formulas. One is your debt equity ratio. Remember, in debt equity, your debt should be lesser than your shareholders equity. Then we can assume as your company is in good position. Next, second one, proprietary ratio. Proprietary means which belongs to owners. Now, in this, shareholders fund divided by capital employed. You know what is shareholders fund and you know what is capital employed. Write down all these working notes. It will be helpful while doing problems. Now, debt to capital employed. You know the formula. The long-term debt divided by capital employed. Long-term debt means what? Debentures. Few companies, they will go for short-term debt also, but normally the company prefers only long-term debt. Then divided by capital employed. What is capital employed? Formula number 1 or formula number 2. Or is calculation number 1 or calculation number 2. You can go for anything. Now we'll go for the next. We'll do one problem so it will be more clear or more understanding. They have given balance sheet. In the balance sheet we have to find out what? They have given 3. First one is what? Debt equity ratio. And what is the second one? You have to calculate proprietary ratio. And what is the third one? You have to calculate capital employed ratio. If it is a 12 marks, so for each thing you will get 4 marks. 4 plus 4, 8, 8 plus 4, 12. If you do this, you will get 12 marks. Calculation is 1, but answer you will get 3. Now, so these are the balance sheet. Try to remember the numbers. So what is your total liability? 7 lakh. What is your total asset? 7 lakh. Now remember you have share capital and reserve and surplus. For shareholders fund, which are 3: capital, reserve, surplus. These 3 we call it as shareholders fund. See, we got shareholders fund. Now, long-term debt. What is for long-term debt? Only debentures. Now, do we have? Yes. Long-term borrowings. We got long-term borrowings also. What is your shareholders fund? 5 lakh. What is your long-term debts? It is 1.5 lakh. This much only. Easiest one. Just you have to identify. Nothing to do with assets now. Okay. Yeah. First one, debt equity ratio. You have to remember the formula. Now, long-term debt divided by shareholders fund. Go back to your question. You will get to know what is your long-term debt. Long-term debt as per our calculation 1,50,000. Now, shareholders fund as per our calculation it is 5 lakh. 1,50,000 divided by 5 lakh. Your answer is what? 0.3 is to 1. It is a favorable or not? It is a favorable. Why? Because your debt is lesser than your shareholders equity. So company is running good. I'll go back to question. Now see, what is the shareholders fund? 5. And what is the long term debts? 1.5. So 5, 1.5, we divided, we got answer called 0.3 is to 1. Easy or very easy? Very easy. Now, we'll go for the second one. Remember, long term, how much? 1.5. Remember, shareholders fund, how much? 5 lakh. Now, one more easiest thing is, so you got long term, how much? 1.5. You got equity fund, how much? 5 lakh. If you add these two, what you will get? This is nothing but capital employed. 6.5 is capital employed. All the answers are here only. Once if you calculate, you will get one by one answers. Now, proprietary ratio, shareholders fund, already calculated. Shareholders fund is how much? 5 lakh. Now, shareholders fund already calculated, divided by capital employed. What is capital employed? I told you 5 plus 1.5. If you add these both, you will get 6.5. In the previous formula, see, your long term is 1.5 and your shareholders fund is 5. If you add both, how much you will get? 6.5. So your answer is shareholders fund, we know it is 5 lakh, and capital employed, we know it is 6.5. If you simplify this, how much you got? It is shareholders fund 5 lakh. Then, so what is your capital employed? 6 lakh 50,000 divided by 6 lakh 50,000. So this much only your calculation. So if you divide this, you will get 0.76 is to 1. This much only a calculation. As I told you, denominator always 1. What is your answer now? 0.76 is to 1. Similarly, so you have to remember what is your net asset. You have to remember what is the formula for capital employed. Now we'll go for the last one. Debt to capital employed ratio. For this long-term debt, how much is long-term debt? Same answer. Your long-term debt is 1,50,000. Now, what is the divided by? Denominator is capital employed. What is your capital employed? Same answer, 6,50,000. As I told you, once if you calculated the same thing, you can use it for every formulas. Now, 1,50,000 divided by 6,50,000. What is your answer? 0.23 is to 1. Okay. So, these are the calculation on solvency ratio. Another two ratios are pending. In the next session, we will discuss about that also. Okay. Hope you understood. So, these are second type of ratios. What is the second type? Solvency. Solvency means what? We look for long term. What is long term? Anything which is beyond 12 months, we call it as long term ratios. All these ratios which are mainly related to proprietor are shareholders. If the shareholder wants to know what is their equity and what is the debt taken from outsiders, what is the ratio combination, for each and every calculation, we have to go for solvency ratio. One of the important ratio in your ratio analysis is called as solvency ratio. In the next session, we'll go for another two ratios. Thank you.